First, we are honored to hear from Senator Cynthia Lummis, who will discuss the congressional perspective, why Congress developed the Clarity Act, what the legislation is designed to achieve, and why clear rules matter for consumers, innovation, and law enforcement. Then we hear from another longtime crypto champion, Majority Whip Tom Emmer, who will discuss the Blockchain Regulatory Certainty Act provisions, why developers need protection, what that section actually does, and how the Clarity Act supports American leadership in the global digital asset economy. After that, we'll hear from Patrick Witt, Executive Director of the President's Council of Advisors for Digital Assets, on the administration's perspective, why a clear federal framework matters for consumer protection, national security, competitiveness, and bringing digital asset activity into regulated U.S. markets. We will then move into a short, moderated discussion focused on law enforcement and national security with Lindsay Fraser, Ari Redbord, and Michael Mosier. They will address why the bill strengthens anti-illicit finance capabilities, how regulatory clarity helps law enforcement, and why blockchain transparency can be a powerful tool for investigators. With that, let's begin. Senator Lummis, thank you so much for joining us, and the floor is yours.
All right, can you hear me now? Thank you, and I'm so pleased to be with you today, and I'm so glad you're discussing it on a Tele-Town hall today. So we finally got the bill out of the Senate Banking Committee with a bipartisan vote, 15-9. And now we're wrapping together the Senate banking product with the Senate Ag Committee product. They have jurisdiction over the Commodity Futures Trading Commission part of this. And we're working on some ethics provisions with Senator James Lankford and the White House as to the ethics portion of this. So while we wrap all those provisions together and begin to garner the 60 votes we need for cloture in the Senate, I want to discuss some of the main provisions that were added in the 4 weeks preceding the Senate markup, because they had a lot to do with law enforcement. And I want to point out just how strong this bill is from a law enforcement perspective now. A lot of it came at the behest of members of the Senate Armed Services Committee, the Senate Intel Committee, and others who are worried about financial crimes involving digital assets. We made considerable progress there, and I want those of you who are listening to hear about this, because I think some of these things are going to be new to you and are very important to convey. If you hear people say, well, this is not as good as we can get with regard to law enforcement, although we are still working with some Democrats on this subject, we think that we have a very strong bill that helps law enforcement with financial crimes that are committed with digital assets. So there are at least 16 separate pro-law enforcement provisions in this legislation and 2 entire titles that deal with illicit finance. So let's get into some of those. Section 201 of the bill requires that centralized digital asset intermediaries comply with the Bank Secrecy Act and also know your customer requirements and sanctions laws. So the other day, Jamie Dimon from JP Morgan was on a broadcast or a television segment where he said that we were weak on AML and Anti-Money Laundering and Bank Secrecy Act. He is mistaken. I suspect he has not seen the most current version of the bill, the one that passed the committee. So please set those remarks aside. Those are inaccurate remarks. Moving on to Section 303 of the bill, it grants the Treasury Department the authority for the first time to block transactions to or from foreign financial institutions that deal in digital assets. Then Section 305 of our bill gives digital asset exchanges and other intermediaries the ability to flag suspicious transactions for law enforcement for the first time and put a temporary hold on those transactions for 30 days. The bill also creates several new venues for law enforcement coordination with respect to digital asset crimes. It gives more money to FinCEN, the Financial Crimes Enforcement Network of the Department of the Treasury, $30 million over 5 years for a total of $150 million to conduct investigations and enforcement actions with respect to digital assets. So they have more training, more personnel familiar with financial crimes conducted with digital assets. So this is the most pro law enforcement digital asset bill that's ever been considered by Congress, and it's not even close. So I know some folks in the law enforcement community are not bought into the current text about the Blockchain Regulatory Certainty Act, but this provision is key to protecting software developers from overzealous prosecutors. And we know that there have been some prosecutions of people who wrote software or developed products that were used both in a legitimate way and in an illicit way. And when the developer doesn't know who's using their product, they should have no liability. The user who is abusing their use of the product is the one that law enforcement should go after. So we've even seen coders leave the United States over the last 5 years because of either fear of prosecution or someone they know is prosecuted. So it's very important to protect blockchain innovation in America that provisions of the Blockchain Regulatory Certainty Act be in this bill. So the amended text of the Blockchain Regulatory Certainty Act that I agreed to with Senator Chuck Grassley, who chairs the Senate Judiciary Committee, protects developers, but it also allows law enforcement to prosecute bad actors who publish code with the specific intent, and that's the key, with the specific intent that their code be used to facilitate money laundering. But if you don't know what your code's being used for, you should have no liability. So when you're speaking with your colleagues who doubt the law enforcement strength of this bill, remind them of these three things. The current status quo is that digital asset exchanges are subject to lower Bank Secrecy Act and anti-money laundering and sanctions requirements today than they would be if clarity passes. Also let them know that Treasury does not now have the legal authority to block potential sanctions violations that occur using digital assets. This bill also changes that. It would give Treasury that authority through FinCEN. And the bill also increases FinCEN's budget over the next 5 years by 16%. So they have the expertise and can bring people in who've worked for companies maybe like Chainalysis or who have a background in the forensics necessary to vet some of these crimes. So I encourage any of you who are willing to talk about this with your colleagues, especially in the Senate, but also in the House, both parties, but particularly the Democratic Party, and let them know how pro-law enforcement this bill is. And I want to thank each of you for your hard work advancing this piece of legislation. It's absolutely transformative. If we don't get it done this year, we're probably looking at about 2030 before this bill could ever have a shot again of being considered. So we want to push this through because we know not only is time a wasting, but that this is the most highly negotiated, bipartisan or nonpartisan, sophisticated piece of a regulatory framework for digital assets that's ever been presented to the public in this country. We know that the regulatory agencies involved are pleased with it, excited about it, want to see it become law. And so your assistance in that matter is deeply appreciated. And I'm so pleased at some of the people that are following me on this call. My gosh, you get to talk to Patrick Witt and Tom Emmer, who's been instrumental in the House on this subject, Ari Redbord and Mike Mosier, all experts, one and all. So unfortunately, we're in the middle of the vote-a-rama here in the Senate, which is all-day voting. We're trying to pass the remainder of funding for the Department of Homeland Security. So I have to run back upstairs and vote, but I wish you well. And again, I want to thank all of you in the Blockchain Association for your tremendous support, hard work, knowledge, and your contributions and counsel in making this a fine piece of legislation. Thanks very much.
Thank you so much, Senator Lummis. We're very grateful to have you as a champion and for all the hard work that you are doing in the Senate and have done leading up to this moment. So thank you so much for joining us. We'll now turn to Majority Whip Tom Emmer. Whip Emmer has been a consistent leader on protecting developers, preserving innovation, and ensuring that U.S. policy does not push the next generation of financial technology offshore. Whip Emmer would welcome your perspective on the Blockchain Regulatory Certainty Act provisions, why developers need protection, what this protection actually does, and how the Clarity Act helps position the United States to lead globally. With that, Congressman Emmer, the floor is yours.
Thank you, Summer. Appreciate the introduction. It's great to follow somebody who's as key to this whole thing as Cynthia Lummis. First off, I want to thank the Blockchain Association for inviting me to join this critically important conversation today and for being a great partner to the Whip's office. Additionally, I'd like to take a few seconds to express our gratitude for the work that our law enforcement officers do on a daily basis. Our law enforcement is actually a priority in the Whip's office. And anybody who puts the uniform on every day and goes out to protect our communities, our states, our country, they know that. They know that. We would only do things to try and aid their difficult job. We are extremely thankful for all the sacrifices that our law enforcement officers make to protect us and our communities, and we're going to continue to do all that we can to back the blue. As for the issue at hand that you asked me about, this is a pivotal moment, Summer, for the United States, and I can't stress that enough. After years of battling overreaching regulators and unelected bureaucrats like Gary Gensler, we finally have an administration that understands the value of this technology and its potential to reshape the future of finance, all while protecting consumers and equipping law enforcement with the resources and authorities they need to pursue bad actors. The Blockchain Regulatory Certainty Act, also known as the BRCA, is an integral part of that. Of course, money transmission licensing laws are designed to protect consumers from the risk of loss of assets, a risk presented, by the way, when transmitters and other intermediaries actually take control of consumer funds. However, with state regulations varying on what type of blockchain-related entities qualify as money transmitters, major discrepancies in the state-by-state framework create uncertainty for our software developers who never have custody or ever take control of consumer funds. These inconsistencies only stifle innovation and push U.S. developers offshore. And I think Senator Lummis made a great point. That's why this legislation is so important. We want them here, and we want them under the supervision of the appropriate regulators. It's for all these reasons why I actually introduced the BRCA almost a decade ago, Summer. It's taken that long. That's why we're not waiting until 2030. I mean, it's going to get done now. The BRCA simply affirms that blockchain developers and service providers, such as miners, validators, and wallet developers, are not money transmitters as long as they never custody consumer funds. It does so by codifying long-standing FinCEN guidance, which has spanned across multiple administrations, Republican and Democrat, on how the money transmission framework applies to the decentralized blockchain space. In other words, the BRCA protects entities that FinCEN already does not require to register as money transmitters and who are not subject to the Bank Secrecy Act. The narrow scope of the BRCA ensures that developers can confidently innovate in the U.S. without fearing government prosecution for merely writing code to develop decentralized technology, which is what Senator Lummis was referring to. I appreciate law enforcement's desire to ensure that they can continue to combat illicit finance, investigate financial crimes, and enforce anti-money laundering objectives, and they should be able to do so. With that being said, I believe that Senator Lummis, Patrick Witt, and the rest of the Senate Banking Committee's members have built upon what we've accomplished in the House to ensure law enforcement have those abilities. And I firmly believe that the BRCA does not impede law enforcement's ability to trace illicit financial activity, and it does not shield conduct that current law properly treats as money transmission. Prosecutors have successfully utilized existing statutes to combat a myriad of illicit activity, and the BRCA would do nothing to weaken their ability to do so moving forward. At the end of the day, the BRCA does nothing to change or weaken Section 1960. It simply aligns the criminal code with the Bank Secrecy Act's definition of money transmitting and FinCEN's longstanding guidance for money services businesses. For the first time in U.S. history, there is a whole of government approach to digital asset innovation in the United States, and that's thanks to President Donald J. Trump's leadership. As we work to finalize clarity, we must remember that the law has long distinguished between the creator of a tool and the user of that tool. Software developers who build non-custodial, peer-to-peer blockchain technology or software tools should be treated no differently. I thank you again, Summer, for the invitation to join you today, and I look forward to hearing the rest of this conversation as it moves forward. Thanks, and I yield back.
Thank you, Whip Emmer, and thank you for your many years of support and work on this issue. That distinction between building technology and providing regulated financial services is critical. Policy has to be precise. When the rules are too vague, they punish responsible actors. It creates unnecessary legal risk and pushes innovation to countries that may not share our standards of compliance, consumer protection, or national security. Next, we'll hear from Patrick Witt, Executive Director of the President's Council of Advisors for Digital Assets. Patrick, the floor is yours.
All right. Thank you, Summer. And I apologize for any background noise in transit right now. But, Senators Lummis and Whip Emmer, I don't know if I could necessarily add to what they said. They covered a tremendous amount of ground and agree wholeheartedly with all of the points that they made. So I think maybe what I can add to the conversation is, representing the White House in this, the president made a number of campaign promises, one of which was to make the United States the crypto capital of the world. And that has several different pillars to it. It was righting the wrongs of Operation Choke Point 2.0 and different actions that were taken by the Biden administration, SEC Chairman Gary Gensler, and others. But another part of it is setting the clear rules for how digital assets are going to operate here in the United States. We saw from the previous administration an attempt to try and kill crypto, bury their head in the sand, and hope that it went away. And they achieved nothing, but they drove it offshore and into a place where illicit finance can flourish in places that don't have the clear rules. The United States, a few things that underpin and really underwrite our position in the world are our military, obviously, our judicial system, but also our financial system, and our leadership in financial markets is critical. We have the deepest, the most liquid capital markets anywhere on the planet. There are reasons why companies want to do business here, why we lead the world in innovation. And so the president views crypto like he views just about any other industry. It's, we want to be number one. We want to lead. And when America leads, we win. We set the standards for the world. We have set the standards for the world financial system, really going back to 100+ years. And this is the financial future. Again, you're not going to succeed in shutting down blockchain or outlawing the technology. It is here to stay. The only way that you would be able to do that is if you shut off the internet, which good luck doing that. China's tried and failed. But we have to reckon with this world in which blockchain exists. Money's moving faster globally. And if we are not setting the standards as the United States, then we are going to be receivers of somebody else's playbook. And that's really the world that we live in right now. We've seen Dubai, we've seen Singapore, we've seen Korea, China to a large extent. Even the Europeans are writing the rules, and they're waiting to see what the United States is going to do. We have a window here still to catch up and put our stamp on the rules and watch all the other jurisdictions conform to those rules. But if we fail to meet the moment, then we're ultimately going to be price takers, and we're going to be following somebody else's rule book. It is frustrating at times when we hear concerns, about this bill from a law enforcement perspective. Not that they're not valid concerns, but my answer, whenever I talk with law enforcement groups is that you should be the biggest champions of anyone for this bill. This bill is a regulatory framework. We're putting shackles is probably too strong of a word, but we're putting real regulatory constraints on businesses and actors who currently live in a state of uncertainty, and it allows illicit activity to take place. This is an industry coming forward and really submitting to a rule book here that applies to traditional market participants. And I commend crypto for coming forward and doing that. So I really view the people who express concerns about illicit activity, digital assets being used to conduct terrorist financing, cartel activity. You should be the biggest cheerleaders for this bill, because this is really what is missing that allows offshore jurisdictions to capture all of the liquidity, the trading activity. It's because the United States has failed to lead in this area. Once we get this framework in place, we have a proper regulatory regime. As I mentioned, other jurisdictions will conform to those rules. And by its very nature, if you're not conforming to those rules, that will be a pretty clear indication that you're engaging in illicit activity or you're not submitting to an appropriate level of compliance. So this is a pro-regulatory bill. It's a pro-law enforcement bill, truly. And as has been mentioned by Senator Lummis earlier, this bill has grown in size as we've gone through this process. We've responded to concerns about a lack of AML, KYC, BSA provisions in here. Titles 2 and 3 are new additions to this bill. Those are serious anti-illicit finance, pro-law enforcement provisions in this bill that candidly gave a lot of actors in the crypto industry a lot of heartburn because they're could be potentially wielded, by a runaway regulator in the future to go after the industry. And credit to the industry getting to a place of comfort where they were saying, ultimately we're going to have to agree to a lot of rules in here that, we know if someone's not a good faith actor in different regulatory positions in the future, could become weapons. But ultimately, we believe it's the way to bring digital assets into the regulatory fold and to allow this industry to flourish. And I'll make one last point. As I mentioned at the beginning, talking about making the United States the crypto capital of the world, and specifically with the BRCA. Why does that matter? On the one hand, it's economic activity. It helps with our GDP. Sure, that's important. That's great. We love that. But it's really the standard setting that I talked about earlier. If we're not setting the standards, if we don't have the leading players in this space here in the United States and abiding by U.S. rules, then inevitably it's going to drift to standards which are going to be a lot more lax and a lot more susceptible to exploit elsewhere around the world. And specifically on exploits, we've seen various hacks take place in DeFi. We've seen DPRK, Chinese hackers go after crypto, gets some headlines, but really any kind of protocols that are that are financial in nature. When the developers aren't here in the United States and making cybersecurity patches and hardening code and making things better, it leaves consumers exposed in a way that serves no one, because it allows the bad actors to exploit protocols, to steal funds, and ultimately be outside of the reach of our regulators and our law enforcement professionals. So it really is critical that the development happens here. It makes the code better. It makes the industry better. It makes the cybersecurity standards really up their game. And that's why it's so important that the development happens here in the United States. So Summer and team, thank you for all the work that you do. Thank you for everyone on this call, your engagement, your concern over this matter. And let's get this bill passed, because it is a material improvement over the status quo, and it's going to do a lot to root out illicit finance in the digital asset industry. Thank you.
Thank you, Patrick. And I know we're running short on time here, so I'm going to quickly hand this over to Lindsay Frazier, our Chief Policy Officer. She is going to have a moderated discussion with Ari Redbord and Mike Mosier. So Lindsay, you want to go ahead and take it away?
Yes, thank you, Summer. I'm excited to be joined by two experts with deep experience at the intersection of financial intelligence and digital assets. So we have Ari Redbord, a former assistant U.S. attorney for the District of Columbia, and also former senior advisor to the Deputy Secretary and Undersecretary for Terrorism and Financial Intelligence at the Treasury Department, who now leads global policy at TRM Labs, as well as Michael Mosier, former acting director of the Financial Crimes Enforcement Network, also a former state and federal prosecutor, as well as the former deputy chief of the Department of Justice's money laundering section. So Ari, we'll start with you. Could you tell us a little bit about, we've heard Patrick Witt and others mention Title II and Title III. Could you tell us a little bit more about how Title II will actually help improve information sharing in practice?
Sure, absolutely. And Lindsay, thank you to you and Blockchain Association for convening this group. I would say I listened to a lot of what was said, so I'll try to get a little bit more granular in some of the details in the bill. But first, to just say, look, I have a unique position where I care about one thing and one thing only when it comes to clarity, and that is how can we build the most robust anti-money laundering regime to keep bad actors from engaging with this ecosystem. And I think we've landed pretty close to there, to be honest with you. And I think Title II is really, really critical. First of all, I think it's extraordinary. I think for the first time, we'll be able to say essentially the crypto industry is under the Bank Secrecy Act and all that comes with that, requiring robust anti-money laundering controls, policies and procedures, using blockchain intelligence, all the things that you want a financial institution to do today when it comes to anti-money laundering, terror financing, that's going to now be required under clarity. I think that's absolutely critical. When Senator Lummis said this is an uplift, this is an upgrade from what we have today, that's a huge piece of this. The other piece I'll get like a little more granular on is the information sharing, because it's really important. Typically I think information sharing is always what we say when we don't have another recommendation, right? You should share information with industry and government. Well, what this goes is a step further and says we're going to use technology to build networks that not just share information in real time, which crypto allows for the first time, right? Every transaction is logged and immutable on a public ledger. And we can now share information in real time that we never could before. And we're going to build networks or certify networks like Beacon and others that allow for interdiction, seizure, and most importantly, getting the funds back to victims, whether it's scams or other types of activity. This is building real law enforcement capability. There's a whole host of other provisions, but I know we're short on time. But those are two that absolutely jump out at me, particularly the information sharing piece, because it leverages technology in a way that is only a digital asset story.
Amazing. That's super helpful. And I know we've also talked a bit about some of the changes in Title III, particularly around hold laws. If you want to dive a little deeper into what you think are kind of the most important pieces of the newly added Title III.
The hold law piece is critical for law enforcement and also for exchanges, right? Financial institutions. Essentially, think about the information sharing provision that I mentioned, right? What the information sharing provision allows is for law enforcement to flag illicit proceeds in real time and send out alerts to exchanges, to stablecoin issuers. But historically, when those exchanges or stablecoin issuers have gotten these alerts, they then have to worry about, customer liability. Can I hold these funds? Can I freeze them? Well, what this law does is anticipates law enforcement needs, essentially at least 30 days to follow up with law enforcement process or something else with extensions possible, and limits liability essentially for those exchanges that are blocking or holding those funds. It's an absolute, when you think about the toolbox, right? It's that information sharing piece, but also that piece to ensure that they can send subpoenas, search warrants, seizure warrants to those exchanges in real time. And this legislation anticipates that.
Amazing. Thank you. And then turning over to Mike, there have been concerns flagged by law enforcement groups around the Blockchain Regulatory Certainty Act, so Section 604 of the Senate Banking Bill. Could you speak a little bit further to these concerns and also describe what the BRCA does in practice?
Sure. Thanks, Lindsay. Thanks for bringing everybody together. I think in part it's important to have the conversation about the concerns from critics because one, having been a prosecutor like Ari and being in the Department of Justice in the money laundering section, our purview included overseeing the nationwide federal money laundering prosecutions so that there was consistency in the interpretation, so that good faith actors could actually build compliance to something that was reliable and consistent. And a lot of what we're hearing around the BRCA is concerns about what is the consistency. And I think that's from proponents and critics. And so I want to put it in just a historical context. The Section 1960 was really a money registration prosecuting statute that has only very, very recently in history, as in like the past few years, been expanded beyond what it was always used for for decades, which was simply somebody who was a hawaladar or a drug courier who ran a storefront, took physical custody of cash, and actively facilitated that moving. It's been expanded very recently to include a software developer, effectively somebody who's just creating the telecommunications or network infrastructure that other people use. We've never, ever used that in the history of 1960. It was never telecom providers. It wasn't packet switchers or routers. It was people who had control. And so when critics raise concerns, it's typically in the context of this one recent prosecution that the 1960s breadth gave a lot of flexibility, and we don't want to lose any of that. And I think from what I would say BRCA does as a prosecutor who used these is like it is not actually weakening or restricting anything. We have all the 1960 that it was always used for decades. We have 1956, 1957 actual active money laundering and conspiracy, fraud, everything else. What it does is simply reestablish the status quo that it was for decades and that good faith compliance was built to, and FinCEN interpreted as the authority over money transmission for years and then enshrined in the 2019 guidance, which is that it's not for infrastructure. It's actually for independent control over moving people's assets, just like 1960 was passed for. And so it's really just allowing people to build compliance to something consistent in that status quo that it was up for until a case, basically. And so I think the concern is like, well, isn't it great to have a loitering law too? And then we can just trust us, we'll only prosecute the drug dealers that are standing around. And I think as a former prosecutor and deputy head of the section where we wouldn't approve those and said, if you want to prosecute money laundering, prosecute money laundering. It's fine to have a lesser included that we plead to, but we're not going to do that. We're going to prove criminal intent. This doesn't weaken criminal intent. All it does is enshrine FinCEN's interpretation that was always the interpretation for years and years. And to all the points that Ari made, is part of this package that not only enshrines that, but it creates a lot more controls and a lot more authorities and information sharing for law enforcement to prosecute these cases while doing that. I mean, this is our best chance to, people worry about regulating DeFi. This is our best chance to do it.
That's incredibly helpful. Thank you so much. And I think to close out this discussion, I'll turn back to Ari to talk a little bit about Section 205, which focuses on digital asset kiosks. Would you be able to briefly walk us through what this provision does and why it might be useful for some of our audience members?
Yeah, absolutely. Look, I think the digital asset kiosk ecosystem has been a controversial area for a long time. I think we see it disproportionately used in scam and fraud activity. I think at TRM we say it's at least double what the rest of sort of the ecosystem looks like today. All that said, so Clarity takes a crack at regulating that space in an even more meaningful way. Limiting the amount that new users can engage with these platforms over the course of 24 hours. That's about $3,500. That they are required to fall under the same types of compliance controls. They're using blockchain intelligence. They're screening transactions. They have to have a law enforcement liaison. I think that's really, really critical, right? It's saying, hey, if you're a crypto ATM, you have to have the same compliance controls. You should have an FIU, a financial intelligence unit, right, in your company that can work closely with law enforcement. So this is a unique part of the ecosystem that Clarity says, hey, we're going to look around and say, hey, where are there gaps and where can we plug them? And the crypto ATM space is exactly one of those. Look, I mean, I think overall it's a great example, but everything Michael said I think is spot on, and that is we have national security authorities that we should be using every day to go after bad actors who are stealing money from DeFi protocols and cryptocurrency exchanges, and we have the authority to do that. The beauty of Clarity is it also will encourage developers to build onshore. So it's a lot easier to work closely with law enforcement. And I think Clarity fits into a much larger puzzle of how we could ultimately keep our space a lot safer.
Thank you so much to both of you for joining today. We really appreciate it, and this has been incredibly helpful. And I will kick it back over to Summer to close this out.
Thank you, Lindsay, Ari, and Michael. And thank you all for tuning in today. I know we've gone a little bit over time, so I will try to close this out quickly. I think first point, and you've heard this loud and clear from the speakers on today, the status quo is not serving consumers, innovators, or law enforcement. Second point, Clarity is directly relevant to law enforcement and national security. And third, blockchain technology gives investigators tools that they do not have in many parts of traditional finance system. The United States has a choice right now. We can build the framework that brings digital asset activity onshore, that holds companies to clear standards, protects consumers, and equips law enforcement. Or we can just allow this uncertainty to continue driving activity into offshore markets where bad actors are harder to reach. I think the answer is clear. We want America to lead. And the Clarity Act is really that opportunity. It reinforces the rule of law. It supports innovation. It protects consumers, and it strengthens national security. And that's why the Blockchain Association supports advancing this legislation. And that's why today's discussion is so important. So thank you so much for everyone who joined us today. Thank you for your work and your engagement and for your continued focus on getting this right. If you have any further questions, please do not hesitate to reach out to any one of us at the Blockchain Association. We're more than happy to talk through these issues further with you if you're interested. And with that, thank you again for joining, and we hope to talk to you again soon.